Hey guys and girls, Nathan here from the B.Invested headquarters. Today, just wanted to reach out onto Facebook, go on Facebook Live. What would happen if I moved my laptop down a little bit? I would show you some junk in the corner of my room. Hope everyone's doing well. Just thought I would reposition my laptop. Cleaning my office and getting everything sorted, sort of settling down in our new headquarters here. So yeah, smash up the likes, guys. Smash up the likes. Just wait as everyone gets on board. So apologies, it's been a while since I've done a Facebook Live like we're doing right now in the office. Got some news articles and some random things here to talk to you about. Just been really busy of late. So yeah, with it, I'll get straight into it. See there's lots of messages here. Hi, Nathan. Nath. High five. Hope everyone's doing well, and thanks for the love, guys. Yeah, just wanted to talk a little bit about what's happening out there in the financial markets. Lots of news happening out there. Where is this GFD that Nathan was talking about? Things appear pretty normal now, but are they? So yeah, with it, I've got a list of questions that was asked in from our Instagram community, which I'm going to answer for you guys on this video a little bit later. I've got some charts that I've printed off and added my own information on, and I've got news articles to talk about the bullshit that's floating around out there in the propaganda outlets. So yeah, obviously let's talk about the elephant in the room. This here is the Dow Jones index. I printed this off. I sent this out the other day to some of my inner circle people, and this is in reverse because my camera goes in reverse to do these videos. But if we have a look at the start of the year, we note that from the end of 2018, the market sort of fell off the cliff. This is the Dow Jones. This is the US stock market. We saw the markets were declining. As I called last year, we would see August to November. That's when the market shit itself around the 10th of October 2018. Since then, we started to see some quantitative easing happening in January, sort of rallied up until March. Then we saw here, which was at the end of the May, we saw the market sort of do a little bit of a crappy thing, and which is not really much considering the volatility in the markets out there. But if we have a look at what happened around May, what did we have happen? Well, here in Australia, we had the election, which everyone's like, oh, after the election, the market's going to be great. Fuck the election, and don't worry about government, because all of your cronies that are out there, you know, saying how great things are or whatever, all the politicians, they're just free-range communists. They're all, you know, here to, they're sort of selected or not elected. They're not going to change your life. Their bosses are the ones that call these shots. And what do we see happen at the end of May and the start of June, which was when I said in February this year, 90 to 128 days, we would see the first rate cut. And that's when we saw the rate cut. You know? And this is a US stock market. However, it overlaid everything. If you go and look at Bitcoin at the start of 2018, in January 2018, Bitcoin fell off the cliff. We also saw all other financial markets fall off the cliff in January 2018. But we saw interest rates get cut in Australia. We also saw interest rates get cut in every other country around the world, even bloody, I think it was Kenya or some other African nation, and every country around the world, right? These guys have got the same problems, right? Interest rates got cut all around the world. Right? I don't know about you guys. It's coming up to Christmas, and it would be pretty hard to organise for, you know, a couple of you to get together for a few drinks, for a Christmas party, for Christmas Day, for holidays, whatever the case may be. However, how come every single bank around the world chucks a rate cut on the same day? Like, it's very staged and rehearsed, and that's because the central banks are what control the governments, right? They're what control the governments. They're what's controlling the world. They're what's controlling your media and every other sort of information. They're what's controlling this Facebook right now. And if we get disconnected because, you know, they decide to cut me off and purge me, well, then I apologize about that, and I'll be a bit annoyed, but life will move on. That's why it's important to be a part of our database and to subscribe So you'll always get information, even if they want to turn me off Facebook one day. You'll be subscribed to our database. And the funniest thing is as I'm actually saying this, the newsletter came in my own inbox, which is pretty funny. So if you're not a part of subscribe to the B.Invested community, don't send me an email. What I need you to do is to go onto the B.Invested website and just subscribe there. So we saw here that happened, very orchestrated all around the world. That was the first rate cut. And then we saw another rate cut, another rate cut. So we've seen 3 rate cuts already. But something very unexpected happened in and around September. And in and around September, we saw the New York Fed actually come out and do a thing called basically a bailout, pay the repo market. So they're doing lending to the repo market. And what that means is basically every single day of the week, the banks as they operate, as the banks close down, there's a shortage of money and they close off. There's a repurchasing agreement. So this bank may not have enough money in their till, so this bank goes, okay, I'll borrow that off you overnight and I'll pay you back tomorrow when we open up, because they go to bed, wake up the next day, go, okay, we'll settle the accounts then. At the moment, the banks don't trust each other because the liquidity is not there and they're about to implode, right? This is what I've been talking about. In the start of September, the New York Fed started bailing out the banks. So the banks didn't have money to lend each other every night. So the Fed is now injecting $30 billion per night into the stock market, into the banks, into the monetary system. Move forward about a month and into the start of October, and we saw that extend indefinitely. And they've increased. The highest pool for the day has been $100 billion. Think about what happened in the GFC. There wasn't even, this is much faster than QE 1, 2, and 3 combined. This is happening very, very quickly. The stimulus measures are coming into the marketplace. What happens after this? Who knows, right? But the only thing keeping this system alive, fiat, debt-based Ponzi scheme, i.e. money, which is purely currency. I saw I had a note in my pocket beforehand. I don't even know who's ever looked at their notes in their pockets, right? You just got, these criminals that are printed on money and whatever, people that rob, steal, cheat. You've got these names that are printed on the bottom of them, like you've got Philip Lowe, those guys there probably have the RBA after me now. But you have all these guys. It's a debt-based Ponzi scheme, and we're now sitting at a point where they've got to artificially inject new liquidity in the marketplace. I just thought I'd share that with you because it's fun to look at. It's showing me where things are heading to. So will we survive the GFD? We will. How will you come out of the GFD? That's the other question, right? So they're going to have to print their way over this. I talked about it many, many times in the past. I was laughed at. I was accused to, stop taking drugs. I'm talking shit. I've been called I'm a property spruiker. Then I get told I'm a doomsayer. Go get your tinfoil hat. I just make shit happen, guys. I understand how markets work. I've got more debt than anyone, in Australia, and I wish I had more. However, I need to know how this stuff works. So looking at some of the things that are happening in the marketplace, I'm going to pull this one up because it's the funniest one. We talked about this last year. And those of you guys that were a part of my mentoring program in 2018 and part of 2019, we talked about this a lot. The government to bring forward infrastructure spending to help stimulate the economy. All they're doing here is they can't afford, so we've got, trading's not going to lay concrete anymore because no one wants concrete. We're in a recession, so the tradies are starting to get poor, and then we start doing bridges and other types of construction. The government needs to go and get money from the central bank, borrow money, manipulate the system a bit more, and do infrastructure. We knew this thing was coming, but we've got here, they're bringing forward. Tonight, Scott Morrison will announce he's bringing forth $3.8 billion worth of infrastructure spending in an attempt to reinforce the economy. I saw on Facebook, you saw my boxes over there in the corner. I saw on Facebook this morning a video of Scott Morrison talking about the farmers, interest-free, repayment-free. You don't even need to repay the debt for the farmers, right? And look, they should be supported. I'm not discrediting any of that. But we're looking at these sort of stimulus packages. One thing I realized the other week, we've seen some really angry little girl, traumatized little girl, that's talking about climate change. Her future has been destroyed. Her youth has been stolen. We've all seen the memes on social media. We've got all this talk about climate change. Where's it coming from? One of the biggest stimulus measures that are going to happen throughout this cycle, in my opinion, it's my opinion only, is that they're going to stimulate the economy by doing some sort of schemes around green energy, some new type of solar scheme, some new type of whatever sort of stimulus package. We saw the pink bats last time. We saw, different ways that they've manipulated the markets in the past, and I believe that it will be some sort of green energy sort of stimulus package. Wow, we've got over 20 comments here. Keep the comments coming through. I'm in a bit of a deadline. I've got to go and visit a couple of people this evening. I've got all my staff out at a function. I need to go see them as well. I just thought I'd pop online. Always say 10 minutes, but we'll probably be for an hour. But yeah, basically, government's bringing forward infrastructure spending. That's going to be a lot of stimulus and government racking up debt. This is communism spending. Going to have a look here. This concerning news. Damning line found in the RBA report. The RBA admitted it didn't realise how important that housing is to the Australian economy, and a sign that it could push back hard against any fall in house prices. Right. So everyone is out there being negative. I've been negative, right? Sure, I've told you guys what I see, all the bad things out there, but I'm excited by it, right? Like, I'm taking advantage of the opportunities out there. Do I think house prices are going to continue to fall? Well, if I did, I would have sold shit. And I'll tell you that. I'll be very open. I was open about every aspect of it. But, the RBA is now admitting you can't trust this news. You can't trust it, right? It's a propaganda outlet for their own agenda. So with it, they never told you any of this was happening. They never told you anything was coming beforehand, and they won't tell you afterwards. So you need to understand, have your own research, have your own knowledge, and be able to, make moves in the marketplace. So with it, of course, the housing market is a important thing to the Australian economy. The only reason why the Australian economy has lasted for so long, everyone thinks that their house has gone up in value in the last 10 years. Oh, well, the property market's gone up so high. No one's fucking house has gone up in value at all, right? None of my properties, none of your properties. Everyone's like, well, I bought it for 250 grand in Sydney and now it's worth $500,000. I bought a little red brick out at Penrith for 300 grand. Now it's worth 650. Your house didn't go up in value. I'll tell you exactly what happened. The dollar that you bought it with lost its value. That's what happened with money. So if you can understand how money works, and you understand everything inside the system that it's used by is manipulated. Simple as that. Interest rates went down by from 7.25% back in 2008, within 5 months down to 3%. That enabled someone, if their interest rate came down by 60% in value, that meant that there's more liquidity floating. The ability for people to purchase that property became further in reach because it was so cheap to buy it. So the dollars that you were paying for that property just lost its value. You had to use more of it. Pretty simple, right? Did you think about that one? Nathan doesn't, I can see it on the headlines, Nathan doesn't think properties have gone up in value. They never did. They never did. The only reason why people were able to buy a new car, right? 2008, people drove shitbox from 1985. You're like, oh, look at this poor bastard. He's got a car from the 80s, right? You didn't think much of it. 2008 hits, that's what we thought. We go to 2018, 2019. If you have a car that's more than 10 years old, you're a poor bastard. What happened to a 85 Bluebird, a 1990 model Magna, right? These shit were all over the road before, and you might see them on the road in Queensland because they don't have to do the bloody pink slip every year or whatever it is that you need to do. But you can go get a car loan for a car. You can go get, you go pull out 50 grand equity, go buy yourself a new car. Go and buy yourself, go put money out of your house and go buy yourself a holiday, right? They need the housing market to go up. Housing is just a byproduct of this Ponzi scheme. Your money is the bubble, not the property. Anyway, here I'm on to itnews.com. IT News for all you gigabyte gangsters out there. Here we are. Negative interest rates threaten to choke the bank IT systems. Pretty cool story, guys. ANZ, CBA, NAB, Westpac scramble to test tech, right? The Y2K bug of 2020, right? Smash the likes. I can see, I think it's Victor that smashed the likes. I see you pop in there. Is it you? If it is, smash the likes again, Victor. With it, if you remember the Y2K bug, I can see there's like 70 on here, 70 of you on here. Hit the like button just so I can remember, just so I know who remembered the Y2K bug. If you remember the Y2K bug, hit that like button. Because in 1999, the whole world was going to turn to shit. I can see people, I was doing like portfolio reviews for people. I've got here, I've got my folders of people that do portfolio reviews. This guy here that I was talking to today, how old was he? Oh, that one was 28 years old. I was talking to someone that's like 21 years old today. I was like, wow, that's cool. I was talking to someone the other day. I actually did a deal for someone the other day, and they were born in 2001, right? 2001. I feel so old, right? But for those of you that don't know and aren't smashing up the like button there, in 1998, 1999, they realized that the computer systems that were running everything, that was like 00, right? So when it went back to 00, what would happen is that everything would roll back to 1900 and wipe all the data that was on the computers. And these things, the computers run, like if the computers stopped, if electricity stopped, you'd have overflowing sewers, right? Because the computers wouldn't run, that would pump all the sewer in the treatment plants. If computers didn't work, electricity would stop. All that sort of shit. Life would stop as it is, right? Everyone was scared, right? Oh, we've got to upgrade. It's Y2K compliant. Oh, what's going to happen, right? They knew shit was going to happen, right? 2020, we've got the fucking banks with the Y2K, right? The banks have got the Y2K bug now. Let's go on to read this, right? From IT Tech or whatever it's called, IT News. We have many systems that cannot handle negative interest rates. There's just no scope for it. That's the chilling matter of fact admission of the National Australia Bank's interim chief executive, Phil Cronican. Sounds like a crony. Following, I guess I'm getting no loans from the NAB now. Following the test of how his institution's massive IT systems would cope with interest rates inverting from positive to negative in what is shaping up to be a core systems horror show, right? They built the bank systems and programmed it not to have negative interest rates, right? The fucking banks, the people that control our world that we live in, right, forgot to look at what happens when this system shits itself. It's funny, right? It's funny, right? Be prepared, guys, because this shit happens. If you can forecast it, you can see things that happen before it's going to happen. It's going to be great because you can use it. I kind of feel like fucking I'm Marty McFly from the Back to the Future. Just, being able to find that sports almanac or whatever the fuck you call it. I've got the tips for tomorrow before it's happened, but it's just because of writing from the wall, right? You guys can too, right? This is knowledge. Everyone's talking about this stuff now. As of last Friday, all of Australia's big four banks have essentially conceded they would struggle to make their transactional and mortgage systems cope with a switch to negative interest rates. Their CEOs confirming a rapid testing testing is now underway to model the consequences of a flip. When it got printed, it had all shit on top of it. Westpac all confirmed they are war gaming the implications of trying to enter negative values into systems that were only ever coded to process positive interest rate cuts, increasingly losing their effect. I think there's a line missing out of there. The banks are failing, guys. It's great, right? By the end of the financial year, we're going to have 0%. 0%. There's no way out unless they do higher levels of stimulus. That's going to mean more infrastructure spending, more government spending, more money flowing out there, shit getting more expensive, and inflation. Either way, it's checkmate. It's checkmate. Things are going to go up. So it just depends if they're going to avoid everyone getting slaughtered or if they're just going to go straight to there. I don't know. Let's see. While the scenario is remote, right? It's remote, right? It's just, we've got nothing else to do. We're just really fastly checking out to see how fucked we are. But, you know, while the scenario is remote, it's not remote. It's not so remote that it's being dismissed by bank boards intent on avoiding a scenario where the systems just stop working, because the idea of paying people to borrow money rather than charging it was never coded in. This is great. While institutional banking, trading, and modeling systems have a range of abnormal scenarios or contingencies for black swan market events, everyday retail transactional accounts, and mortgage ledger systems, and the databases and applications that underpin them, and by large do not. Giving evidence to the House of Representatives Standing Committee on Economics on Friday, the crony, whatever his fucking name is, crony, the candidly admitted that NAB's core systems were not yet up for an interest rate flip, right? Just think about it, right? Generally speaking, the idea of negative rates was never contemplated when some of our core systems were developed. What, back in fucking 1999? Crony said, before cautioning that the scenario was still sufficiently remote not to start justifying new modifications. Don't stress, guys. We're just testing it, right? I don't wake up in the morning and go, fuck, I don't know, an aeroplane's going to run into my house. Let's prepare for it. Unless I think, fuck, there's like 50 of them starting to fall out of the sky of my house. It's not a part of my day that I worry about. But why are these guys putting it into place, right? We've done some initial testing on both New Zealand and Australia to assure ourselves, oh, New Zealand's fucked too, right? Could have told that a mile away. Even if we ended up having to offer negative interest rates on deposits, or if some of the bonds that we own were negative yielding, our systems would cope, Elliott said, before conceding to issues. Oh, we're all fucked. That's what they're saying. That work is ongoing. We have a high degree of confidence, but not a perfect degree of confidence. They don't even know if their system's going to work when the banks shit themselves shortly. We'll also need to look, for example, at terms and conditions. Just think about this, guys. Just think about this. Right. I smashed my car the other day. I haven't called up the insurer. I've been too busy. Right, I hit a fucking kangaroo and took the front end off the car. It's pretty funny. I'm driving like a $700 97 Camry at the moment. Just I haven't got time to call. And they changed the terms and conditions in the insurance policy, and I'm going to have to like choose my own repairer, right? I want to choose my own repairer. I don't want to send it to theirs. But the terms and conditions, they change your shit, right? When you go and sign your loan document, it didn't say that they could change your system that's processed by. Let's look at the legal parts of this. Everyone thinks I'm a bogan from Western Sydney. Let's look at the legal side of it at the times, and let's find loopholes in our mortgages to see if we can get around our mortgages that we didn't sign up for with the terms and conditions changing in certain ways. But just think about this. We need to look at, for example, the terms and conditions. I don't know whether it's permitted under our terms and conditions of deposits to even have negative interest rates. They don't know if they can change your bank account, so they're going to be in lots of shit, right? They don't know if they can charge you to put the money in the bank account. This is great. Asked if the tests were in preparation or Yeah, look at this. Look at this, right? Yeah, wait, I'm going to highlight this for a laugh, right? Asked if the tests were in preparation or just as a cautionary measure, Elliott told the committee it is totally cautionary. What, not because they've fucking already planned for the fact that the bonds are going negative, right? There's like $20 trillion worth of bonds that are negative around this country, around the planet at the moment. It's great. I think it's incredibly low probability, but it would be prudent for us just to be prepared. Oh, let's be prepared. Yeah. Like fucking, I don't know, camels are going to be flying over my fucking fence tomorrow. They don't fly, right? I don't need to worry about that. But if I thought it was going to be a possibility, then I'd have to worry about it. These guys are obviously scared. This is fun. In other words, low but not impossible. The Commonwealth Bank CEO Matt Comyn was more upbeat. Those specific questions on system preparations were cut off by Andrew Lee enthusiastically chasing the details on mortgage loyalty taxes. Yes, we are doing that work to determine if there are any limitations with a number of our systems from being able to accept negative rates. We would say we think it's extremely unlikely. Oh, maybe they have their shit together for like the largest bank in the fucking country. We thought it would be prudent to ensure that those extremely unlikely circumstances ever did eventuate. We need to understand what the impacts of that change would be. I can't read it. It's like printed over double. It tends to be what happens in institutional borrowing markets with central banks and the like. So we think we're in a reasonable shape to deal with that. We also don't think it's going to happen. We think it's pretty unlikely, certainly preparing for the possibility. Hartzer said. Where's Hartzer from? I don't know which bank he's from. It's from another bank. Watch this space. So there you go, guys. The banks are all fucked and they can't account for negative interest rates. So that's sort of what's happening out there, folks. So there's also a lot of fraud that's happened out there, and a lot of things that are happening in the banks. Like the banks are all posting losses. They're all getting extra money from their bosses. Do you know that the bank's boss is the same boss as like fucking Scott Morrison? Who pays? Let's think about who pays the fucking. This is a real question, right? When you work for like the government, who pays your wage, right? Like say you are at the top, right? Does Scott Morrison and all the boys sit around on a Friday after? I don't drink, so I don't even have a fucking drink here to show, but they sit around and go, oh yeah, shit, let's just transfer a little bit of money to us, Where the fuck does it come from? Who pays their wage, right? Is it their big boss upstairs? Did they even declare it, right? There's, oh, we've got the Muppet here. Oh, we're bringing the other one. What's his name? Albanese. Oh, right. It's just interesting. So with it, I can't see most of your comments because I've been so excitedly talking and everyone's been writing. With it, I'm just trying to see what questions you've got. I've got questions here that I'm going to talk about, and I'm going to have to cut this one a bit short. So Mark Chan, central bank says double down on the QE. That's it. Print more money and everything goes up. Don't have to worry about the problems anymore. But if you got assets, if you hold that shit, that's where the money is, guys. That's where the money is at. Rob, you're a gun and your information is always much appreciated. Appreciate Rob. And thanks for everybody being a part of the community and obviously checking in. You guys could all be at the pub. You could all be, relaxing on Friday afternoon, whatever. And for you guys to, be watching me talk and rant on Facebook. I'm humbled by that. Steve, have not seen you for years, mate. You come a long way from out west. Steve, I hope all is well with you, mate. I see you popping up on my Facebook, on my personal page from time to time. I hope everything's good and everything's well for you. Spot on. Adam told my girlfriend to watch Nathan. Yep. Thanks for tagging everyone in. I died in 1990. 9, none of this is real. Everyone thought that the water was going to stop coming out and everything, but they found a way. How do you reason I feel born in 1964? It's all about the turmeric. Michael, hope's all well out in the Shelby for you, mate. Rowan, hi Nathan, believe you. Small world. Nuclear power plants would melt down. When would we be putting our money now, Nathan? Where would we be putting our money? Good question. I certainly don't even have any money. I'm always poor, right? People laugh at me sometimes. I know the AFR wrote a story because I realised that the GFD was happening because I couldn't settle on some properties. But I'm always dumping my cash into new assets, into things that are going to bring me cash flow. With property, the reason why property is my favourite go-to, I always say that I've got about 50 mil worth of property, and I've got about $1 million worth of assets, because my asset isn't all in property, but it's my favourite go-to. I've got all different things that I invest in. For me, I have zero money. Like always, I know that it's going to come in, and I know that what I'm doing is creating more and more of those income streams for it to keep coming through. So property is something that you can buy it today. You know that the value of the money is going to go down, and you can pay off the debt with tomorrow's money that's going to be more inflated. So that's what I like property for. But there's all different ways to put money out there. If you do have some questions or want some help, I have posted a link there in the whether it's on this side or this side or whatever the side it's on for you. Flick me an email with your position if you want me to have a look at your position. Remembering, I don't even give a shit anymore by putting my disclaimer, I'm not your financial advisor. I'm not a financial advisor. I'm just telling you some comedy stuff today, guys. But with it, if you do want to get some advice and feedback from me, do flick me an email with your questions that I can answer them for you, and even have a chat if you feel the need to. Mark, maybe the banks could get off-the-shelf solution from the Euro banks. It's certainly negative. I don't know. It's uncharted territory. It's very uncharted territory, but with it, it's exciting. If I'm Marty McFly or the bank's Biff, possibly. Michael, love the way you tell the news, bro. It's been a while since we had in the mentoring. I see a lot of laughing here. Tyson, if the RBA wants us to borrow money by giving us low or negative rates, I'm guessing we should do the opposite of the short term. Look, for me, I think that picking up debt at the moment, attaching it to a fixed asset, and taking it through a cycle is awesome, because you're going to be paying it off. Like the amount of money that they're injecting into the system, when this shit's done with, right? We're just at the start of it at the moment, right? They tried to take the liquidity out of the system that they put there 10 years ago, when the GFC was here. When they started to take that liquidity out of the market, we ended in a recession. They couldn't even stop it. We didn't even see interest rates go up. If we had a good economy, the interest rates would have gone up from 1.5% to at least 1.75, but no, we had to drop it from 1.5 to now 75 basis points. So it's pretty funny. I heard from a source inside of Westpac they are in the process of liquidation, be gone by early next year. Look, I'm not alleging that any banks are going to go under, apart from those idiots over at Deutsche Bank, but they seem to be manipulated beyond belief, because if those guys go down, it's not in the national interest, it's in the fucking global banking system's interest to fix that. The question I have to ask that I haven't seen in any news outlet, not even nowhere, right, is when the banks actually pay the repo money back. Does it go back to the Fed, or is that being taken in an off-sheet balance, in an off-sheet transaction, and going into some other sort of liquidity? So when the banks have to pay it back, is it going in the back door and being lent out to someone else, i.e. like the Deutsche Bank? Because this system is staying alive pretty fucking well. Just my thoughts, my 2 cents. And how long can they manipulate before the dollar dies? That's the question. As I said at the start of this, right? I said at the start, not of tonight, of start of when I started talking some whacked up shit a couple of years ago and everyone thought it was crazy, is that there's one more cycle in this. but the one more cycle is going to bring massive inflation. It's going to be great. It's going to be great. Daniel, I have a question in Gladstone. It has negative. I have a property in Gladstone. It has negative equity. What are your thoughts on the market coming back to allow me to buy better performing properties? Daniel, I went in there. I'm not a fan of mining towns. I pick up properties in capital cities, so Sydney, Brisbane, Gold Coast, Central Coast, Wollongong, Blue Mountains. Well, I buy in the capital cities. I do pick up stuff that's in like some regional areas sometimes for a specific purpose. And Gladstone's one of those areas that I had looked at quite in depth. And we've been picking up a bit of stuff whilst that's been on sale, but I'm not suggesting to go buy that. But, you know, I have done a lot of research in that place. We actually manage properties out there, and we started restructuring people's rentals because all the agents were shit. My office Blink property, give myself a plug here, guys. Why not? All my at Blink property, I'm just going to throw an ad break in here. At Blink property, we manage people's portfolios. But my staff have actually decided on how to restructure some of the rentals out there and getting like double the amount of rent for some of the people that have been sort of screwed over from, you know, obviously the market declining. So I personally see that the market is starting to recover. As we see commodity prices increase, we see the dollar become more volatile. We see mining activity around the country becoming more profitable, pull shit out of the ground. We're starting to see some of these mining towns come back to life. I'm not a fan. I'm not advocating to buy in there, but I do think that, you know, the market has hit a bottom in a lot of these places, and, you know, when the market recovers, maybe it's a time to drop the grenade on someone else. So yeah, if you have any questions, just send me an email with your position, and I'm happy to have a look at it and give you some feedback on what I would do. Mark, that's the same story regarding the US Fed Reserve. They were talking about raising interest rates at the start of the year. Oh wow, I love getting excited by this stuff. Like I'm just laughing because it's fucking funny, right? So Mark's saying that basically what happened in the US, the chairman Jerome Powell, who was employed by the Fed, it still is. Said that we're going to increase interest rates. They're going all the way back up, guys. And he started increasing interest rates in the US last year. Oh, it's gone up from like 25. It was 0.25%. It was 0.25% interest rates in the US. And it went all the way up to 2.25 or 2.5 or whatever it was. And they go, we're going to keep raising it. Like everything's great. We're going to keep raising rates. Going to keep raising rates. Didn't even get, if we go back to the chart, wherever it is. This one here. And we go back to the chart, and I said that in last year, the market just died, right? Like it started December, that's when the last interest rate came in. It died, right? Big time. And then the market started to recover. By here, the US is starting to reduce interest rates in June, July, right? The market's screwed in the US. They couldn't even increase their interest rates. They couldn't, right? And then if you think when the markets need to recover, it couldn't even stay at 25 basis points, 0.25%. So now when they have to reduce the rates, unless they do something really dodgy by printing heaps more money and just dumping it in the system, which is going to push everything else up, which I really doubt they can. But even if they do, interest rates have to go down lower than where they were before. They're going to go to all new time lows. So it's going to be pretty crazy. So yeah. Thanks a lot. What is your email? Check in the description. Emails in the description if you want to. If anyone wants to have a bit of have a look at their portfolio, give them some advice, give them some feedback on what to do, please do that. Hop on and send me an email, and I'll get one of my team to organise a phone call from Birchie. I can have a chat about what's happening out there in the marketplace, how people are robbing everyone of us blind. I don't even know if there's people there, some lizard fellas. I actually had a lot of questions here from the community. Here it is here. So if you're not on Instagram, follow my Instagram page. I think it's like Instagram, whatever, Nathan Birch with an underscore, all one. but then also the B.Invested, the @B.Invested Instagram page. So these are some questions that were asked in from Instagram. I'm going to answer these questions for you guys, and get back to you guys. So I've got a question here. What would it be better to buy a storage unit, franchise, or develop your own? My answer to the question is, the question came from the fact that I've been sharing some storage facility sort of stuff that I've been talking about, because I'm starting to rent sheds and looking at building purpose-made storage facilities just to generate more cash flow from some of my larger land banking sites. For me, I'm not going to use any franchise. I don't even know if there is a franchise model, but I'm not using any franchise. I'm just setting up my own storage facilities, finding my own marketing, putting them out there. Like I used Facebook Marketplace the other day, and I had like 50 inquiries for a shed, like 50 inquiries for a shed in the back end of Sydney. And I've got a shitload more of them to rent out. So if anyone needs storage, hit me up. But with it, I wouldn't be using a franchise. However, with my motels in early 2020, I plan on hitting up. I've already been speaking. I've been in big talks. I've got maybe I'll just put this over the edge of the computer so you can see that there's little folders here from hotel groups. I've been having meetings with hotel groups to franchise. Actually, I'm not a hotelier, but I've got these buildings. I want to get highest performance out of them. So with the hotels, I'm looking at getting franchises in and paying them their franchise fee just to understand, just to understand how they work. Pay them their fee. If I have to pay them an X amount of percentage of revenue, I can learn, use their skill sets, bolt onto what they've got. And improve my own businesses for that. So that will be cool. So to answer the question, would you be better off? Would it be better to buy a storage unit, franchise, or develop your own? I'm developing my own. I'm not getting a franchise. But when it comes to other places like motel, I'm using franchise. Next question from Instagram. How will rents perform given negative interest rates, low inflation rates, etc.? If we get negative interest rates, we're not going to see low inflation, folks. We're going to see high inflation. Looking at negative interest rates, they're going to come. Will rents survive? We're in a lull at the moment with rents in a lot of states and territories and locations. But it comes down to supply and demand. We need more tax slaves. We need to breed. We need to bring in people via immigration. So we need to keep people coming in, but we don't have enough housing. So if we're not building the housing and it's not profitable to build, so no builder's going to build, well, then there's going to be a shortage of rental properties and people are going to need to pay high rent. So it comes down to supply and demand. I don't think it has anything to do with interest rates. But imagine, right, just imagine this, folks. Interest rates go down. If you've got a neutral cash flow property day, it's giving you no money, right? If you've got 10 of them, right, and the interest rates come down by $50 per week and your rents go up by $50, right, there's $100 per week, right? If you've got 10 of them, there's 50 grand a year. You could be retired in a year, 2 years, 3 years, right, by structuring yourself right. So there's some random feedback. Question from Instagram is, do you invest in shares on the stock market? For me personally, I have invested in shares. I do buy lots of shares. I like the stock market. However, at the moment, I feel that it's very risky. I own zero shares, stocks, whatever you want to call them. So I don't own any paper assets. I own cryptocurrencies. Am I a big fan of cryptocurrency? I believe in what they do. I like the technology. I think that the potential there is to be very good in the future. I think lots of liquidity will flow into that. I think that when it comes to the stock market, that lots of liquidity will flow into that, but it's not something I'm willing to gamble on at the moment. And that one, my friends, is a non-financial advice, because I don't give financial advice. I just say shit as it is. Next question is, would you still buy on the Gold Coast, and which suburbs would you buy in? Yes, I'm still buying on the Gold Coast. I bought properties on the Gold Coast in 2020 for 2019 for myself. I've already been in the future and bought in 2020. No, I have bought properties this year on the Gold Coast. I continue to buy on the Gold Coast. I own probably 50 properties on the Gold Coast myself, and lots of good opportunities out there. As for the locations of them, that's my IP. I run Australia's largest buyers agency. With it, I was the third buyers agent in the country to start up. Nowadays, there's buyers agents out there. There's courses for people to become buyers agents, right? And I find that hilarious in itself. But at the end of the day, I have a buyers agency. I buy properties for my investors. I can help you guys buy properties, build assets into your portfolio. And I do it very different than those spruikers and people coming out of the marketplace today. So if you do want to buy properties, I do deals where you buy stuff that's very well below market value, 10% discount, 20% discount. I bought properties last month for my investors that you buy one and you get one free. Before I hopped onto this live stream today, I sent an email out to one of my investors. I tried to call him. He'll probably call me back. Might have called me already. I don't even know what my phone is. Oh, it's in my pocket. And it was buy two, get one free. So that's how I do my deals, guys. I never see you building a block of units. Why do you prefer buying ones already made? Good question. Sometimes in some markets, you got to work with the market that you're given. And sometimes, and most of the time, should I say, I like buying properties already there, right? If I'm buying a property that's, below market value, cheaper than it costs to build it, why would I go and build the thing, right? I'm after the property as a vehicle to get me from where I am to where I want to be. My business isn't buying a block of land, building some units on it, selling it off and make a bit of profit. So I want to own the asset. I own the asset, control the asset, and take the asset through market cycles. Think about it at this point, right? Especially this point. I've got a lot of land and property that I'm going to develop. I will develop it in the future, but now is not the time for me to develop it. I want to hold more asset. So in this market cycle, I have the option. I've got an acre of land in the heart of the Gold Coast where I can build multi-story units, right? An acre, right? I could build like hundreds of units, right? I could go and build that thing right now, right? Or I could spend a little bit of those funds that I would be spending on that just to go buy more assets while things are on sale, like 20% off, 30% off, 40% off, someone on their knees, whatever. I'm about accumulating assets. I want to take assets through the market cycle. I'm not about, structuring some finance and trying to have to do pre-sales. When I build, I'm going to build them, I'm going to keep them and rent them out. So that's why I do that. A lot more risk in building. I see people that buy a block of land, build on it, takes them a year to build, 18 months to build on it, and then they have to sell it or rent it out, and they've just wasted a year or 18 months in the marketplace. In some markets, I do it. A couple of years ago, when APRA started screwing around with the market and the finances, we did a few bulk deals where we buy land, build a property on it, sell it off, make a profit, buy land, build a house, rent it out, make a profit on it, that sort of stuff. But, that was a strategy for a specific time. That's why I don't build all my units. I'd rather go buy stuff that's already established and I can get it on the cheap. It's going to be like saving me all this time. I don't have to go and, have all the extra level of risk to it. So that's why I buy established properties. I have 2 properties with approval for 2 times 3 bedroom townhouse, approval for 2 times 3 townhouse sites. Build now or buy another. Look, once again, that may constitute as financial advice. I'm not here to give financial advice. I'm just the funny guy on social media. However, I said it in my previous comments, at the moment, me personally, I'm buying properties while they're on sale and while they're below market value. I'm going out, accumulating the assets rather than having to go out there and build at the moment. So I've got lots of sites that I'm going to build on, but I'm just not building on them at the moment because I'll do that when the market becomes too hot and when I don't want to be buying so much and all that. But at the moment, any bit of money I could have right now, I'm just dumping it in the new assets. People are scared. They're reading news. Oh, that ticket on the channel, whatever news that comes up when the sun rises in the morning, right? He told me the sky's going to fall in. I better sell my house cheap, whatever, right? They're the people that I'm wanting to hear about, because I'm like, oh, wow, you've watched the news beforehand, have you? And you've been fed lies. So, I'm seeing the opportunities to pick up bargains at the moment, so I'm not building. Question here is it possible to buy a property from you guys with a $40,000 deposit? Look, with it, sorry, I just saw emails coming through. Is it possible to buy a property with you guys for a $40,000 deposit? Yes, it is. Most of my investors come in 30, 40, 50 grand, and I'll start their portfolio with that. So my investors aren't people that are wealthy with millions and millions of dollars. I like to think that when they're, with me for a couple of years that they are, but when they come in, start with very, normal sort of foundation. So like 40 grand, I bought my first property with about 35 grand back in the day. 40 grand is fine to get in the market today. Can you do prenups? This question here from Instagram. Yes. A lot of people don't realize, people think that B.Invested is a buyer's agency. Nathan Birch is a buyer's agent. As I said previously, I started the country's third buyer's agency over a decade ago. There was no such thing as a buyer's agency. However, B.Invested is much more than a buyer's agency. B.Invested is an education and a community, but more so than that, I've founded many, many businesses. So some of the businesses that I've founded have been a law firm, an accountancy practice, a financial planning business, a finance company, a national real estate firm. With it, we do a lot of prenups. I have a business called Zenith Legal. You can email, flick us a private message, whatnot. Contact Zenith Legal. Look them up on social media. Contact Stephen Sidorovsky. He's my principal lawyer over there, he can help you get a prenup. If you've got wealth, you're going in a relationship, you're moving in with someone, cohabitating, whatever the case may be, probably best to look into a prenup. You wouldn't drive your car uninsured, but it can be a touchy subject. So I'm not here to get into people's relationships, right? But if you need help getting a prenup, you do prenups, wills. Everybody needs a will. If you have a body and you don't have a will, you need to get a will. You might think, I don't own any property either. I don't need a will yet. If you've got children, if you've got a super fund, if you've got your body and you want to know how it can be sort of disposed of after you're living here on Earth, you should be speaking to us for a will. So hit us up. I'll help you get a will on that front. Thoughts on large cash amounts in the bank at this stage, circa $250,000 in a current offset. Look, I'm not the dude here to sit here and talk to you about, take your money out of your offset and take it on the bank or whatnot. For me, I don't like having money, right? I'm always spending it and buying assets that's going to put more money in. But if I was holding, hypothetically, large amounts of money, which would be $500,000, $250,000, $100 grand, $1 million, or having an offset, if you have your money in an offset and you're not using it, a lot of banks are actually winding back lines of credits for investors at the moment, or anyone. So you could be sitting there thinking you've got access to this funds, and the bank just comes in and grabs it and closes down your facility and clean out the dust on people's portfolio loans. There's one thing to bear in mind. But if the bank does go bust, there's allegedly, just like the allegedly beforehand in my news that we're reading out, there's allegedly a $250,000 bank guarantee. If the bank goes bust, up to 250 grand is covered for under the entity. You've got a few options. One, put it in different entities. So you can have, say a husband and a wife, 250. Say you got 500 grand, husband and a wife, 250 grand in each person's bank account. Two, one under a trust and one under a personal name. keep it under that 250, because if the bank does go bust, it's only insured for 250,000. Sorry, you could go and take that 500 grand and spread it out across a few different banks to minimize the risk, so you're underneath that insurance. That's if the insurance works, guys. That's if the insurance works. We haven't seen a bank collapse. We haven't seen a bank run. If it does, we could be completely, utterly fucked. So just be mindful of that. Yeah, so on that note, guys, I said I'd try and hop on here and have a quick night's worth of questions and answers, give you guys a few laughs, give you guys a few bits of thoughts of what's happening out there in the marketplace and whatnot. One thing that I'm seeing out there is that the market is getting very, very, very hot at the moment. I've lost about 15 deals this week getting gazumped. Property prices are rising, markets are rising. Don't get too caught up and think, oh, we're heading into a boom. We're not heading into a boom, but the bottom end of the market is being cleared out. It's the very, very early stages of the next property cycle, which is heading an upward trajectory. As interest rates go down to 0 to -%, quantity of easing comes in, ability of liquidity to flow through the markets, prices will rise. So just be aware, guys. Be aware of what you're watching out there in the media. Be aware of suckers rallies where everyone goes, oh, I better get in now before it's too late, right? Never get caught up in that. Yeah, I think nowadays they call it FOMO. I call it a suckers rally because people go in and they get slaughtered. We're in a very early stage of a boom. Property prices haven't risen. They've jumped up. They've hit a bottom. They've come back to this level, but still got to get back to here in most places. So, yeah, with it, it's a very exciting time out there to be taking action in the market and to be doing things. If you need help, as I said multiple times this evening, I do a lot more than just a buyer's agency. I help people locate properties and negotiate them, but also help people, build financial plans, help them, achieve their goals through property as one vehicle, business as other vehicles, all different stuff that we work with. Hit me up, hit up the team. Happy to help out where we can. We'll catch up soon, and thanks for tuning in once again, guys. Have a great evening. Bye for now.